Welcome to the Decent People Podcast, a production of Decential Media, where we're committed to telling the stories of the founders, builders, and visionaries who are creating a new decentralized economy and internet experience. You guys know it as Web3 or blockchain, but we're going to bring you the smartest and most interesting people in the space for intimate conversations that reveal their background, how they got into crypto in the first place, and what they're doing today to make a decentralized future a reality. Thanks so much for joining us, and check out our site at decentral.io. Now, to the show.
Hi, and welcome to the latest edition of the Decent People Podcast. I'm your host, Matt Leising, and today we are joined by a guest who is about hip deep in the fintech world. Lex Sokolin has served as the Global Director of Fintech Strategy at Autonomous Research, which is an equity research firm for institutional investors. He's been the Chief Operating Officer of Advisor Engine, which is a digital wealth management platform. Before that, he served at Wall Street banks, including Barclays, Deutsche Bank, and Lehman Brothers. That's a lot of words to say that there isn't probably a game in the fintech world that Lex doesn't know about. So I'm really excited to talk to him today. Lex, how you doing? Thanks a lot for being here.
I'm doing great. Thank you so much for having me.
Yeah, it's a pleasure. I wondered, I know you're in London now, but I wondered if you could kind of take us back for listeners. What was your childhood like? Where did you grow up? And what was your family doing at that time?
I am in London now. I've been here about 5 years. There's a great financial services, but also fintech and crypto scene here, a lot going on. But I grew up in New York City and all over New York City. First in a little bit in Brooklyn and then Queens. I went up to college to Amherst and then came back down and spent about a decade more in New York, enjoying all the pleasures of the Lehman bankruptcy and kind of the beginning of the fintech scene in the US with investment management getting automated. It was exposure to pretty much all the different things that go on in a metropolis, so whether it was the museums and the art, and I got hooked on a lot of digital art through that, or whether it was internships in, the investment banks and kind of just seeing the image or like the weight of the skyscrapers. I think a lot of that was a big magnet for me.
Yeah, I can't imagine as a child that would be really sort of imposing, but in a good way, I would think. And also sort of just like, wow, look at what's possible here in this amazing city. Before New York City, I believe you were born in Moscow. And do you remember that as well before you moved over to the United States?
Yeah, I was born in Moscow, and my family left in right after the wall fell. So I was 10 years old. I have some stark memories of Russia, and I have not been back since 94. Those memories are of certainly a lot of good family memories, but also hyperinflation. I remember, the cost of bread going from 10 to 100 to 1,000 to 10,000 in the course of months.
Wow.
I remember the violence in the country at the time of the transition into capitalism out of a centrally planned economy and tanks in the streets. And, it's ghastly to me. It's just chilling to see what's happening in that region now with really similar sort of echoes.
Was that Boris Yeltsin that took the country from the planned economy into some sort of capitalism?
Yeah, it was...
I know Gorbachev was there, I think, when the wall fell, but then I think it was Yeltsin, right?
Yeah, so Gorbachev was the premier of the party who brought in Western concepts, and in particular, freedom of speech and an attempt to rebuild the economy. He did it in a way that relied on the Chicago School of Economics, sort of the very hard transition concept. So the economies of Eastern Europe, when they opened up after the collapse of the USSR, some of them went gradually. You can look at Poland as an example, and some of them went hard right into fully floating markets. And I think Russian GDP fell by something like 80%.
Oh, wow.
Just entirely decimated because the market structure and the legal system and all of the things that actually make capitalism work weren't there. So it was highly economically destructive to the country which led to, alcoholism, violence, crime, all the things that you do not want.
Yeah.
Boris Yeltsin came to power after Gorbachev. So Gorbachev was the one who initiated the attempted transitions. And then Yeltsin was, kind of the symbol of the collapse of the USSR and the first president of the Russian Republic. So a different sovereign with Gorbachev kind of exiled. He was in power until the late 90s and then transitioned to Putin, who has been on top of it since.
Ever since, yeah. Do you think going through that stuff and seeing like the hyperinflation you mentioned at such a young age influenced you into wanting to be an economist? Or is that something that you think if you had had a different upbringing, you might have gone a different way?
Yeah, I think for me, it's a combination of things. And I'm the head economist at ConsenSys, which is a Web3 company focused on user adoption of Web3 decentralized applications by people, so through the MetaMask wallet, and then developers building applications on the other side through tools like Infura and so on. Cryptoeconomics in this context is a fairly creative practice. It's almost like an experimental practice. Normally, economists study the past, and they can't really run experiments unless you're in charge of the Federal Reserve or, some country's treasury. Whereas in Web3 and in DeFi with tokens, there's a lot more control over ecosystems, and you can create financial incentives for people to behave certain ways, and you can play with money supply and see the outcomes of those experiments. And so, for me, I think it's been a windy road into these positions. I mean, I do have economics training that I got in college. I have a JD and an MBA from Columbia, so I've done some grad schooling, but I don't have a traditional, like PhD path into wanting to do deeply quantitative economics backwards of history and so on. But rather, I've always really enjoyed the innovation on the frontier of financial services. I really like looking at systems as these structures and understanding them, trying to create models of them, trying to describe them, trying to figure out if you pull on this side, what happens on the other side. And so I think I appreciate these token design systems as well as broader financial services, as well as the fintech industry's kind of macro structures. I have a pretty good intuition for how they work. And growing up, I think the instability for sure of that period, but then also my experience with Lehman Brothers and watching an investment bank implode and much of the US economy implode as a result, I think just taught me that, underneath it, there's no institutional or authoritarian truth. There's no sort of deeper anything. There's no fundamental whatever. There's just stuff that people make up and then agree on. And that's very powerful because I've also got this kind of desire to architect, so to see a system, but then to architect some solution or some sort of web or an art piece. Like I grew up doing a lot of visual art. So for me, it's almost this creative act. It just happens that the medium in which the creative act happens is this kind of economic medium or fintech medium. And I think that's what's interesting and compelling for me about it.
Yeah, and your point about, things just not really having any real foundation, I think has only been proven more true for what we saw like in the Trump administration and a lot of the norms that people just expected of politicians and public figures and institutions as well, just sort of once they were tested, just didn't seem to have anything behind them. But I wonder too, like, so you saw, you mentioned a lot of the instability and the kind of show of force and violence and things in Russia, and then coming to New York in the 90s, that must have been quite a counterweight to that experience. How do you recall that sort of affecting your worldview and what you thought of what was possible?
It's an existential question. It's a hard question. There were waves of immigration into the States since the beginning of the country. There is no country but for immigration. There are, the indigenous people that were here did not have the American nation as such. And the moment the American nation started, it was immigrants building on top of immigrants in layers of people kind of seeking opportunity, thinking about manifest destiny and the gold rush and so on. That's woven into the American character. And I think it's why, certainly in the 80s, 90s, and early 2000s, it was such a beacon of, it was such a canvas, I think, for people who want a better life. That certainly was the case for us. The immigration experience is quite, it's quite different, and I think can be quite difficult depending where you come from and for what reasons. And for us, it was political in large part.
Were your parents professionals, or what were they? Were they able to do what they did in Russia over here in the United States, or did they kind of have to remake themselves?
Not for a while, and with fairly substantial damage to at least one of their careers. My father is a very technical engineer. He designs helicopter transmissions, and he was able to continue that.
Wow, cool.
Although it took him several years before he was able to get into the right role. And then my mother is an architectural historian. Just the entire market structure of what it means to study art and to practice it is very different in a Western world versus what it was in Soviet system. Because in the Soviet system, propaganda and kind of grand gesture was power. So, building the biggest building or creating a national monument was far more important than, owning a bank. One is for accountants, the other one is for national heroes of politics. So you can see the kind of the gap, right? Whereas if you appear in a capitalist system, people get paid for value they create, which is very different. You can have whatever grand designs you want of propaganda, but that's going to be hard to compare with Elon Musk building rockets or Teslas.
Yeah, great point.
There's definitely an adjustment for them professionally. There's a language barrier. But for me, luckily, I was young enough that I was a sponge. I think I tried as hard as possible to assume an American identity and absorb as much as I could. And I ended up going to a great public school in New York called Hunter College High School, which was full of kids like me. So if you know Stuyvesant or Bronx High, Hunter, all the same.
Well, I got to say, you don't have a Russian accent at all. I wouldn't really ever think, maybe less, except for your last name. Congrats on that, I guess.
Yeah. It's a fortune.
And I'm sure you might not think about it this way, but it seems very formative, to watch your parents go through that and struggle and make sure that everything was okay for, so that they could give you a different life. It's hard, I think, sometimes to realize like how that formative, like you said, you're a sponge. It probably just all kind of came into you. Well, I just wanted to say, talking about grand gestures, I've been to Moscow, and I remember the day I stepped foot into Red Square was just absolutely blew me away. Not to take anything away from what you said, but just the grandness of it and the scope with, the Church of Spilled Blood, and then you've got the National History Museum, the Kremlin. It was just something that just literally took my breath away. It reminded me of the first time I saw the Grand Canyon. It's just kind of something you need to see with your own eyes. They definitely know how to do grand gestures.
And there are a whole number of absurdities, right? So, for example, and I don't remember this at all. This is just a retold memory that I've read about. The Moscow subway is like palatial.
Yes.
It's a wonder of the world, right?
Absolutely, absolutely.
And the New York subway is an industrial grind full of rats and squirrels fighting to the death.
A nightmare.
And like you would be mistaken about which is a good place to live in that is prosperous and which is a destitute place to live in and is poor based on that. But that's the power of the physical space and the propaganda around it. It's incredibly impractical to make a palace out of your subway if you have people that are starving. I think that's the difference between the cathedral and the garden, right? So you can build an enormous, beautiful cathedral and centrally controlled only a centrally hierarchically controlled process can give you a cathedral, whatever that cathedral is, whether it's landing on the moon for the first time or whether it's a literal cathedral. Alternately, you have the system of the garden where trees grow and compete for resources, which is natural light or water or whatever it is. And a lot of the US, although it's not really true, but at least the myth of the US is that it's a garden, that anybody can, if they're smart and thoughtful and lucky enough, can grow into a powerful big tree and bloom and all of this stuff. Of course, there's a lot of mechanism that is invisible that amends that, but I think at least the metaphor of the extremes is helpful.
Yeah, I agree. And I think, America obviously has many, many problems and has had many problems throughout its existence. But I'll hear from even people from, London or the UK, that the amount of opportunity here and that's not necessarily bounded by class and other things like that, that are, parts of Western Europe still have that today, I think is the one thing that really does sort of stick out to people and makes them want to be here for all sorts of different reasons. I would love to talk to you about your experience at Lehman going through the financial crisis, because that was formative for me in my reporting career. I was working at Bloomberg News at that time. My oldest son was born in July of 2008. So it was from mid-July until about early September, I was on paternity leave, and just like totally was my first kid. My wife and I were just, it just swamped with stuff, and he wasn't sleeping and all sorts of things. So I was kind of tuning out the rest of the world. And then I kind of come back to it. The first day back, I get this assignment, go down to Lehman Brothers. They're like, people are getting fired and they're leaving with boxes full of their stuff, like go try to get interviews. I think this was their office down by the New York Mercantile Exchange, like in downtown, right on the water there. So that was, and then obviously the effect of everything, the financial crisis on the world economy and all the effects that it had going forward was something that became, a central part of my reporting job. But I'd love to hear what it was like to be inside there at that time from you. A lot of people kind of say that the canary in the coal mine was when the two Bear Stearns hedge funds, I think, blew up in the summer, late summer of 2007. I think they were real estate investment hedge funds. And then if you were really paying attention, you were like, oh shit, things about to get crazy. But most people, it didn't kind of hit until about a year later. But how do you remember that period? Did you understand that part of the market, or were you focused on what you were doing for Lehman at that time?
I'm so deeply grateful for having had that experience. I was I was very close to missing it, and I didn't. I started there in 2006, and then 2007 was still a strong year, and it was 2008 that the earth opened up and swallowed everybody whole. I was an analyst in a strategy group, so kind of a former McKinsey little pod that was attached to the investment management business. Lehman had, as most investment banks, had three big businesses: capital markets, investment banking, investment management. And Lehman had just bought Neuberger Berman in 2003. I joined in 2006. And so the strategy for the bank was in large part following in the footsteps of Goldman Sachs and diversifying into just AUM and getting into
assets under management.
Yeah, just getting out of
wealth management in general more. Or?
Yeah, wealth and asset management. So Neuberger is an independent company now after the bankruptcy, but Neuberger was a 200-some billion plus asset management firm. So they took money and they had portfolio managers. And then we also had a 150 billion plus wealth management division, private wealth and institutions. And then there was a bunch of private equity also that sat alongside it. And, culturally, the investment management business is very different from banking and is very different from capital markets. And so, we were in a building, 399 Park, which is in the 50s on the east side, and the banking bit was by Times Square. And I remember getting trained with the investment banking class and being like, oh man, did I avoid some personal disaster, by not going that route.
Having to work in Times Square.
No offense intended, yeah. Exactly. Yeah. Even though I was junior, I had a really interesting seat, which gave me exposure to management decisions, strategy and management decisions, and kind of I ran the spreadsheets to track the business and kind of all the pricing analysis and so on. The interesting part for me was, I don't think on the wealth side we really saw it coming. We didn't see what capital markets had done, to put it like that.
Very few people did.
That's true. But I do remember the human reactions, and those have really stuck with me. And there's different anecdotes that informed a bunch of my career decisions. So I remember the branch manager of the New York office, somebody who's running 80 financial advisor teams, and they're generating whatever it is, 100 million of the firm's revenue. Actually, I don't remember, probably closer to 500 million of the firm's revenue. And Lehman's stock went from 100 down to 20. That was a big drop. The rumor is that there's a deal with Asia sovereign funds and everything's fine. And we've got this guy who's probably in his late 60s pulling 10 million a year, because I know everyone's comp at that point, walking around saying, great deal, buy of the century, $20. And these are the people that are the professionals advising the wealthy and institutions on their asset allocations who are doing nothing but staring at the markets. And this is their boss telling them an investment decision, which is 100% absolutely wrong.
Right.
I'm not gloating. It's not crocodile tears for bankers. It's just the human nature is such that you will it's impossible in the moment to see, no matter how qualified you are, no matter what information you have, just plain wrong. And so that's stuck with me. Another one that stuck with me.
Did you ever have? Oh yeah, go ahead, please.
I got a lot of these, so you're welcome to cut me off anytime.
Totally. No. I love these stories. Please go on.
Another one that I remember is, I was keeping a spreadsheet of the revenue that was melting, because every day since the bankruptcy was announced, or the fact that there was no bailout coming from the treasury was clear, teams just were leaving. I don't know which animals can't quite think of which animals are, carnivorous and just eat each other when one is wounded, but UBS and Morgan Stanley were eating us alive. I mean, the firm was there. It was in acquisition processes with Barclays and a bunch of others. And UBS and Morgan Stanley were buying out...
Picking people off left and right.
With the best first, of course. I'm keeping the spreadsheet of the revenue kind of melting every day, 20% every day. At some point, we get to this problem of a bunch of our top clients were also holding auction rate securities. I might be conflating time periods, but I don't know if you remember around that time, there were also auction rate securities, which were this instrument, this fixed income instrument, kind of like a money market fund, but the interest rate on the money market fund is set through an auction, like this arcane auction process. It's like 1% or 30 basis points or whatever. Never in the history of these things has there not been an auction that's cleared. And of course, it's 2008. Okay. So the auctions do not clear. So a thing that you thought was fully liquid, I mean, it's a little bit like Terra, you thought was fully liquid actually is worth now zero, because you can't, it's not rolling forward. The underlying instrument's supposed to roll forward through these auctions. And so a bunch of people who thought that they were allocated to cash were actually allocated to a structured derivative. And the lawsuits started to get aimed at the banks. And I remember running a spreadsheet of okay, which clients of the firm are clients of investment management, investment banking, and capital markets, and who are the best clients that we just have to bail out? And I think I ran that analysis. We got through 20 names that we were able to give balance sheet to, and 21 next week was in the Wall Street Journal suing the firm.
Oh, wow.
It's a fantastic experience. It's great. I was so liberated of any affiliation to investment banks after that.
That's a great take. I don't think you would hear that very often. I wondered, did you ever feel fear? I remember, I think it was when TARP was going through Congress and it failed. And I was watching, I was at Bloomberg, I'm watching the Bloomberg terminal. The vote fails, and I swear I was watching the S&P. It just went straight down and just down and down. And I was like, Jesus Christ, in seconds it had lost, I don't know how many. It was a huge percent.
Yeah.
That was the one time where I was like, oh, it felt sort of like something happening on a TV show or something to me, before that. But then that was a moment where I was like, Jesus, this might crash the entire economy. So I wondered, did you ever have a moment of fear like that? Or were you just sort of on the inside and knowing these guys, I mean, I don't want to put words in your mouth, but they're kind of getting what they deserve?
I don't think there's any difference at that moment of time between Lehman or Bear or Morgan or Merrill. I think Merrill Lynch was more underwater than Lehman. I'm biased, obviously. I think the reason Lehman failed is that he walked into a room full of people from Goldman Sachs in the Treasury. Goldman Sachs was running Goldman Sachs and the Treasury and Morgan Stanley and Merrill Lynch or something like that. And I think it was just personal. And, that's my sense of the outcome.
They made sure Bear Stearns got sold to JP Morgan.
Yeah.
But then Lehman was sort of that's a bridge too far. I think. And like you were saying, it's really interesting that mark-to-market issue was so prevalent in all of that. It's just people had no idea what anything on their books was worth anymore. And I think that's what just really terrified folks.
The transparency wasn't there. I think a lot of software today would have prevented that, the how unknown the risk was. I think we now have a lot of technology to actually get those exposures. And of course, if they're in crypto, it's even easier to understand what the exposures are. Although, not in the case of Three Arrows Capital. So I think to that experience, and
there still are black boxes.
Anything that's a human relationship is a black box. And after Lehman, I spent 6 years building a robo-advisor and saying things like active investing is bad for you and you should have a passive asset allocation portfolio and nothing else. And I didn't just say it. I believed it exactly for the reason you described, which is that you were lucky to lose 40% of your assets, and it could certainly be a lot more.
Last thing I'll ask you about the financial crisis. From somebody who lived it, what's the best movie you've seen about it? The most true to life, maybe.
I'll dodge the question and say there's a great Lehman Brothers play that was on in London.
Oh, really?
That traced the history of the firm from the actual Lehman Brothers, who ran a bank and lent to the town, and how that all came about. It's a fantastic play. It was very moving, and it made you feel wistful for Dick Fold and brokerage, which I never thought I would again. But I guess art elevates it.
Well, does it go from that period with the actual brothers all the way to the crash, or is it just sort of about the founding?
Everything, yeah. So it starts with the troubles they had and how they ended up in banking, because it started out as like a store.
Okay.
And then
so it spans that whole time.
The growth of it, and there's complicated generational stuff that happened, and political battles to take over, whether it was going to be an investment bank or whether it was really going to be like a capital markets trading company. There's lots of great stuff around that. But it feels these days almost, it's not a footnote, but that type of Wall Street firm, it seems unimaginable to continue. It seems out of this world to remember what it was like to work there, if that means anything.
I'll answer my own question. I think margin call was the one that I thought was just rang as true as I was on the outside, obviously, as a reporter, but if anyone wants to check out a movie about the financial crisis, I liked Margin Call quite a bit. So I was reading and listening to podcasts you've done, and after Wall Street, like you just said, you went into fintech pretty heavily for many years, created your own firm, and then worked, at a high level at a couple others. And I read you said at some point, that you felt like they were getting it all, like, not wrong, but they just weren't quite hitting the mark. And it occurred to me that fintech is really about the front end. It's about how does a user now interface with a bank or, a lending app or something, Marcus on their phone, or, Robinhood, where you can have commission-free trades. Whereas blockchain and Web3 is all really about a fundamentally new underlying technology, and it's something that underpins everything. So in fintech, you've got a nice new shiny front end, but it's still the legacy banking system with all its creaky, parts and stuff. And with blockchain and Web3, like, it's a brand new engine. And I wondered if you'd agree with that, and if that's something that sort of attracted you to it.
It's totally right. And I think for me, it goes back to trying to find the edge of change and the parts of that edge that I believe in, and then trying to project a rigor. Like, if this is true, what could it be in the best way, but rigorously, not in sort of a fantasy hallucination, but rather like, what system could we really build on top of this? Fintech, people will say, oh, well, the payment rails have always been fintech, or NASDAQ, we've always been fintech, and so on. And I think that misunderstands the trends a little bit. For me, the fintech genesis moment was Mint.com. And I think for other similarly situated people, when they saw what Mint did, it kind of clicked. So Mint was a company that was sold, I don't remember when it was founded, but it was sold in 2007 for about $170 million to Intuit, the tax company. And what Mint did was sit on top of bank data. So it did data aggregation through kind of backdoor screen scraping of people's accounts. You give them your username and password, and they pull it all together. Today you can call it embedded finance or open banking or PSD2, blah, blah, blah. But it was data aggregation, and they gave you a great visualization of your stuff, much better than your bank does. And on top of it, they started to layer a little bit of financial planning, a little bit of lead generation for various credit card products and so on. But they blew up to 1 million users for a finance product, for a web finance product. And literally nobody else had done that. Nobody. what clicked for me is that the Silicon Valley approach, which at the time is Web 2, kind of Facebook, software in the browser, the Silicon Valley approach can be applied to finance. And all of the things today that are obvious and boring and, neobanks, robo-advisors, digital investing, digital lending, that stuff was just starting to react to the concept that you can use the web for distributing financial products. The only move we all really had was to build front ends that, I think about it as manufacturing and distribution. You've got the storefront where people buy sandwiches, and then you've got the factory or the back of the store where the sandwich is made. Yeah. And so the store, you're changing from the bank branch to the mobile phone. And that's very reductive, but it's also accurate for maybe 80% of the things that people talk about. I think fintech, including some of the things that I did with my company, like we were in the Betterment Wealthfront and then kind of InvestNet cohort of things. I think we did a lot to wire traditional manufacturing. That includes investment custodians, it includes portfolio management software, core banking software, things that no person should ever have to learn, to wire that into web user experiences and try to understand the consumer behaviors about how they deal with financial products, why they deal with it, and just figure out the ways to bring finance to the internet experience. I think what blockchain and Web3, and in particular Web3, so Ethereum and other programmable blockchains do, is they give you a new place, they give you a new factory, they give you a new manufacturing layer for every kind of financial service, whether it's payments or whether it's banking or whether it's investments or whether it's capital markets or insurance, because all of that is written in software and you can write any software that you want. It's a completely new chassis for manufacturing. To me, it is so clearly, correct, because the old chassis is made of Scotch tape and broken dreams.
Yeah. No, it's written in COBOL too. Yeah.
We already, yes, I'm being generous. But yeah, we already have the fintech distribution bit, right? How should it look in the phone? How should it look in the browser? We already have it. And it was just Spotify selling CD-ROMs. It was Netflix selling video cassettes. For a while, Netflix actually did used to send out video cassettes.
Oh yeah, I used to get them.
Until streaming became the right thing. And so I think to me, it's super obvious that, big tech and fintech distribution will end up sitting on top of Web3 manufacturing, and likely a lot of Web3 native financial products will become much easier defaults for people to interact with.
So earlier when you're speaking about your love of systems and and how everything interoperates, I was thinking, oh man, Joe Lubin must love you, because Joe, I think, thinks in very similar ways. That's the head of ConsenSys for anyone who doesn't know. Can you tell me a little bit? Obviously, you must have been aware of Bitcoin first and then Ethereum and other smart contract platforms as you were going through your fintech kind of journey. But what was it that sort of drew you out of that world and into the Web3 world and the Ethereum world more specifically?
Absolutely. And I try to smooth the story because in my mind, it's like this is all sort of this is along a continuum. There's like a consistency to the things I believe, and they have all this stuff in common. And so, just continuing to choose for novelty, that's been for me a guide of trying to select what I work on. I have enough faults and interests and kind of ego, but I try to make decisions in my career around novelty. I think that creates surprising and interesting outcomes. More specifically around ConsenSys and Bitcoin, any entrepreneur will tell you when you've got a company, you just don't see anything else. Like, it's invisible to you, it's unimportant. The only thing that's important is how you're going to win. I was so focused on the digital investing stuff that I went to a conference in 2013 to San Fran, and it was like a fintech conference, and somebody took a poll of how many people in the audience had a Bitcoin, and like half of the people there raised their hands. And I was like, what am I doing with my life? Like, I'm a fintech entrepreneur. This is my area of expertise, and I don't have one of these. And what's going on? So, I came back. I think, I opened up a Coinbase account, and then I was like, "It was my birthday coming up," and I told my wife, like, I just wanted Bitcoin. It was $500. Or no, sorry, it was 250. It was 250. We were grad students, so budget is different. And she was like, "This is a dumb idea. I'm not going to do it for you. Here's half a Bitcoin." That's what I got in 2013.
So you can hold that over her forever, probably, right?
Yes. I mean, it's literally, it's almost 10 years later. And yeah.
When it was 60,000, you're like, oh man. Okay. So yeah, obviously you know about it, but then did you think it was interesting? Did you think it was usable, or did it just kind of sit in your account?
It just sat in my account. I knew some folks in the ecosystem, and I knew some investors like Ribbit Capital. I know was very excited about Bitcoin in that time. I was really interested in how, my main thesis at the time was that people hate financial products. It makes them feel bad to interact with financial products, getting a mortgage, getting an investment account, getting an insurance policy, negative utility, whereas social media, when you share pictures, it's positive utility. You get dopamine hit. If I'm like, go open an investment account, you feel bad. So my thesis was you need to create experiences that make you feel good about interacting with financial products and that remove the friction. And that was sort of my mental model. And so introduce into that the pitch that we're going to replace money with a thing no one can hold, and the money supply will be replaced. And the Federal Reserve it's all a fraud and a scam. And it didn't connect, to put it lightly.
Yeah.
It's not that I was right or wrong. It was more that for me, I'm more interested in kind of the operating, the things you can build around money for people than I am in changing up the money. Like the power structure, like I can observe the power structure of the Fed and like why people had to issue the handouts, or rather the, the distributions in COVID and all of that. Like I understand it and I can track it and I can understand the impact. The question of what to do about it, my intuition is, what experiences do you create for people? And so in 2016, I joined a firm called Autonomous Research, which is an equity research firm, now part of AllianceBernstein, based in UK, London, which is what got me out here. It was a way for me to kind of step out of the investing world and look at banking and payments and capital markets and really go broad across all the industries. And then also to get out of this, like, put the old products into the phone mindset and ask, what are the big platform shifts that are actually, what are the real things that are happening outside of just digitization at the edge? And so I joined Autonomous as a partner to stand up their fintech practice. My counterparts were large institutional funds that ran, most of the investing in public financial markets. And then I also had a number of consulting clients who were the large publicly traded firms, so their strategy teams or their boards and so on. It was like this fintech innovation angle. And I zeroed in, it wasn't hard to do it, but I zeroed in on artificial intelligence and machine learning, number one, blockchain and crypto, number two, and then AR, VR, number three. And today, if you take that and you mush it together, you get the metaverse and so on. But, in 2016, it was fairly novel to say, like, what's the impact of this stuff on Wells Fargo and JP Morgan? Not a obvious question. You'd also ask questions like, and financial versus Apple, or Amazon in finance versus JP Morgan underwriting versus lending club. So there were interesting questions, but the fundamental question was this platform shift question. And of the three vectors, AI, blockchain, and AR, VR, I ended up spending 20, 30, 50, 60, 70% of my time on blockchain because it hit the ICO boom. I happened to build the database that Bloomberg used for reporting the volume of ICOs. So Olga and I spent a lot of time on the phone updating that chart. And, it got me like thousands of hits because that was the chart for what the volume was. To me, it looked like this Cambrian explosion of, creative destruction on Ethereum of all of these projects, this like venture ecosystem. And it does not matter to me that it like collapsed. It really doesn't, because I think the underlying thesis is very right. And like you say, it's just the infrastructure and its maturity coming in waves. And so that's kind of how I got bit by the bug.
Yeah, no, I agree with you there. Yeah, the scams and everything are very regrettable, but the fact is the ICO boom was such an important thing because this was capital creation without a bank being involved or a VC lender or anybody. It was peer-to-peer capital formation, which, is taking a very traditional financial product and moving it into the digital peer-to-peer world, which I find fascinating. And it was only, the beginning of that. If you then think about collateralized lending in the Web3 world, lots of other things like another type of capital formation that is now being remade in this new image. That's what you need to be paying attention to, I think, because that's not going to go away. And it's now the cat's out of the bag on that stuff. And so it's too bad that there are, so many scams and people lose so much money, but there are fundamental shifts going on here that you shouldn't ignore because of the bad stuff.
Yeah. And there's a couple of distinctions I want to throw in there. And probably my Lehman experience desensitized me to the cycles, the collapses. And I think that capital losses and negative retail experience is awful. It's absolutely horrible. And so it is regrettable. But I think separate from that, there are a couple of things that came out to me at that moment. And the first is, you mentioned that the capital formation, this investment banking type function, that's true. That's the sort of YouTube-like quality of Ethereum. So in the way that YouTube generates video, Ethereum generates capital. Like who makes YouTube videos? The people. Who makes capital? The people. I think there is a different thing there, which is, yes, that's a financial product, but more interestingly is the creation, it's the economic outcome. So the creation of companies and businesses that run on Ethereum and Web3. Even splicing the ICO data, you could see multiple different industries being represented, from media to healthcare to telecom to financial services. And then you could see that for each of those, there was a diversity of various plays and attempts. So it just looked like a venture ecosystem. And a venture ecosystem is an economy. And an operating economy that has all this differentiation is, to me, it's a lot more interesting than Goldman Sachs making money on underwriting some debt offering. It's the fact that there's all these small businesses doing a fractal complexity of things because they have new tooling. And I think, ICOs were venture decks with a lot of hopium, and then DeFi and NFTs were functional applications with throughput limitations and kind of some broken models, but the stuff worked. The next wave, if you extrapolate, it's not going to go back. It's only going to go forward. And I think it's like the cat's out of the bag, or, Prometheus and the fire, right? That people now have this tool and they can build economies on top of this tool. And if you can build economies, then you can start creating a really interesting specialization and novelty. So you can have DAOs starting to replace the business unit, people coming together and pooling their labor to create product, because the effort that goes into that labor, a digital painting versus a physical painting, end of the day is the same labor. So you start getting these operating economies, and then that economy has to be banked. People who are living in Web3 as their primary source of output, they're going to need to also consume through it, right? So DeFi protocols today, many of them are largely financial engineering, but they will become more and more of a banking system for the economy that grows out of Web3. And I think because the infrastructure is so different and alien, it has to be new. There's no way to shove Wells Fargo or Morgan Stanley into it. It has to be bottoms up. And I think that's really exciting.
Yeah, that's a great point. And speaking of stuff that works, the merge was just a little bit over a week ago, came off seamlessly. That's, of course, Ethereum's long stated plan to move from proof of work to proof of stake. I watched it live. It was at the same time like extremely exciting and very boring. And I think, to be honest, I've been trying to compare it in my mind to anything that I've seen technologically, and I really can't find its equal, because this was something that had been worked on by many different teams of, hundreds of developers all around the world, thousands of other people giving them support to move this. I think it's $165 billion worth of value right now on Ethereum seamlessly from one security system to another. And I mean, they pulled it off without a hitch. I just want to give it props, and I would love to hear any thoughts you have on it. I'm really a bit baffled by the market reaction to the price of Ethereum dropping almost 20% since then. And I wondered if you have any thoughts on that. But first, I'd love to just hear, maybe give a shout out to ConsenSys or anybody about just what a technologically astounding feat that they pulled off.
I echo your sentiment. I'm a geek for this stuff, but it makes me think of the space missions and the anticipation people had about things going right. And of course, it's not us going in the physical space, and it's not us going in a submarine in the water, but it is us exploring a different space, a software space that we're creating. And I think that type of exploration, there's not a lot of places we can go, right? So our own psyche, our own creativity, our own models. I'm sure that if you reduce it in some abstract mathematical space, it's all the same. It is that kind of event. And I think the other part of it is that it's not like Bank of America acquiring Merrill Lynch and then being excited about reducing the number of portfolio management systems from 20 to 5, right? Like, I'm sure that's hard and you want to move that money over and so on. But the excitement here is a public excitement. Like a well-functioning blockchain, I think, is a public good. The crypto space can be quite difficult and people can be toxic, and having the markets there is a ton of pressure for everybody all the time. One of the things that I've appreciated about ConsenSys, and Joe in particular, is the commitment to contribution to the space. Like just the commitment and standing up the protocol. And yeah, the incentives are there for some of the people at ConsenSys, but there's a large protocol team that is focused on making sure that ETH works. For years during the bear market, for example, Infura was free for all of the apps that were accessing the network. And similarly, MetaMask continues to be free and so on. I do think that ConsenSys has this stewardship role. And of course, that cuts in a lot of directions, but it was really cool to see very bright evidence of that contribution to the network.
And then what about this price? There was definitely a narrative out there definitely on crypto Twitter that the merge is not priced into Ethereum. And I've written about this a little bit, and I believe that narrative. I thought it was valid. We've seen the opposite in the days after the merge, and I'm wondering, how do you square that?
Yeah, it's definitely frustrating. The most I can do in my role is to understand and try to describe. Get that description close enough that I believe it, rigorous enough that I believe it. So it's impossible to talk about ETH in isolation as an asset. I think modeling it in relation to its own supply, hold everything else equal, but you can't. So the large backdrop is the macro environment, and the macro environment is the world's on fire and getting worse. People's housing costs are tripling, their incomes are eroding 10 to 15% a year, depending where you are in the world. So people are getting squeezed. All of the meme stock trading gains from Robinhood have been erased about 3 months ago. So people who made money in COVID are now down, are flat over the 2 years, up and then down, and probably have lost more. So you've got horrible consumer sentiment. And then the mechanism of the rates rises and inflation haven't been fixed yet. So there's still huge uncertainty. That matters because funny thing about correlation, all assets are correlated because they're held by people. So all assets have that correlation going to 1, because if you're out of money for your rent, you don't care if you're holding stocks, bonds, or crypto, you're selling. You need it to make payments. That's why things go down in tax season. And especially when your holder base is retail, where a lot of the assets are kind of like consumer discretionary, meaning that I buy an NFT because I would have otherwise bought like cool sneakers or a video game, right? Instead, I buy an NFT and I play the video game of Twitter with my NFT and I troll people. So consumer discretionary, how much are the average? Yeah. Depending on this macro environment, like people will spend or they will sell. Crypto has gone down a lot and is super sensitive to these macro gyrations. And then, you switch into looking at one level closer, which is the game that the traders play. And the traders are playing the game of, is it priced in? Do most other people think it's priced in or not? And if they do, do I take the opposite reaction to that? Do I sell into the fact that other people are buying? those games can get pretty recursive. So if people are expecting a proof of work airdrop, then you'll see lots of people buying ETH, but maybe people are overbuying it based on the dividend expected. And so maybe it's time to sell and so on. And then on top of that, you have the dynamics from the miners, right? So if your business just lost, half of its revenue because proof of work on Ethereum is something you no longer have or have access to, then maybe holding ETH isn't something you want to do on your balance sheet. So it becomes out of scope. And so you have sales pressure. And that has a market impact kind of downstream from market structure. I really don't like taking that stuff very seriously because even though we have to, and it has a huge impact, but it has nothing to do with the fact that the technology is better or that it's easier to build on or that, there's like all these DAOs building things. It's just how people are positioning relative to each other. And then I think there's one final layer down, which is to me the important layer, which is the post-merge inflation schedule, the emissions going down from 4.5% to 0.5%, plus the burn on top, and the concept that ETH can be deflationary and have negative 0.5 kind of contraction per year, something like that. That is all true and fantastic. It is describing the supply side of how much ETH is out there. If you can tell me 1 year...
Just to jump in, that was always a big criticism from Bitcoiners about Ethereum, is that like, you don't even know how much there is, or it's like it's going to go up forever. So just to give a little context there, that was a criticism that was leveled at Ethereum for quite a while.
Absolutely. I think it's very productive that there's a new monetary policy that is much less expensive for the protocols. So you're getting more security for less inflation, which is good. But, look at Bitcoin. The supply side is known and it swings up and down, 40 times up, 80% down, 20 times up, 90% down, right? And the same with ETH. So that's happening not because of the supply side. It's happening because of demand for the currency. Until ETH is a $10 trillion money supply, which can no longer handle 70% down and 20% up swings. When it's at that size, I think the emission schedule and the supply side of it is going to be the main driver of value accrual. So you'll be like, okay, well, my 5% interest on ETH, of which there's 10 trillion, I'm going to get 5% give or take at the end of the year. But with the current situation, the capital gains and capital losses just overwhelm people's experience with that inflation. And so then the question is, well, what drives demand? One of those things is kind of the trading games I've described. And then the other thing that drives demand is the operating economy on Web3. Is there an operating economy, or are we passing around things in a pyramid? And that's the make or break it kind of moment for me, is like, is the financial stuff a derivative of the economy? Does it result from having an economy that works? Or is the financial stuff a zero-sum game and, it's just like obfuscated? And so the thing that I'm zeroing in and trying to zero in on as much as possible, and in part why I've been focusing on crypto economics and try to take it seriously, is without a functioning economy, this thing's just not going to work. And I think there's good evidence that there's growth, that people are behaving in new ways and organizing in new ways. And I think there's also, it's fair to be skeptical, but that's kind of the exciting thing of being on the edge.
Yeah, those are all fantastic points. The only thing that still, maybe it's, we're short term here. It's only been a week and a couple of days. I would think that investors would recognize what the team of Ethereum developers did, and the community was amazing. And I would bet long term on that team and that community to, they deliver on what they say. It might not always be when they say they're going to do it, but they always do deliver. And this one was by far the biggest thing that they'd ever accomplished in that regard. And I believe it was something like 7 different clients were involved, and, they all worked together after the merge, and it's been going very smoothly ever since. So I just, we talk about communities a lot, and people, where are the developers going? Is it Solana? Is it, here or there? Ethereum has always had a huge advantage in that way. And after this successful merge, I would just think that people would see that even, that's even become deeper into, the history and the accomplishments that the whole community has been able to achieve. But Lex, this has been really fascinating. Thank you for all your time and for being so open about your past and telling us some great stories about the financial crisis and everything else. It's been wonderful, and I've really enjoyed our conversation.
An absolute pleasure. Thank you so much for having me.
Yeah, that's Lex Sokolin. He's the chief economist at ConsenSys. And maybe just real quick, and I'll put this in the show notes, but tell everybody, Lex, how they can get a hold of you or follow you or just keep up with what you're up to.
Absolutely. ConsenSys.net or MetaMask.io for your crypto needs. I'm fairly easy to find. You can get me on Twitter at Lex Sokolin. And then I also write a newsletter called the Fintech Blueprint, where I cover a lot of these ideas. I'm excited for anyone to reach out.
All right. Great. Again, thank you so much, Lex. It's been an absolute pleasure.
Cheers.
That's it for this episode of Decent People. Thanks so much for listening. Check the show notes for more information on our guests today. And make sure to look us up on the web at decential.io. That's DECENTIAL.io. And on Twitter at Decential. Have a great day.